Hi, I'm James Leichter. I'm the president of Aptora, and I wanted to talk to you today about balance sheets. At some point in your business career, somebody, like your banker or maybe your prospective mother-in-law, is going to ask you for a financial statement. Generally, when someone asks you for a financial statement, they're looking for three basic documents: a balance sheet, an income statement, and a cash flow statement. What I want to talk to you about today is the balance sheet. In other videos, we'll talk about the income statement and the cash flow statement. A balance sheet basically has three things on it. At the very top of a balance sheet, you have your assets. This is stuff you own. This would include cash, vehicles, machinery, accounts receivable, money customers owe you. Below assets is liabilities. This is money that you owe people. Liabilities might include a loan on one of those vehicles. So you might have a vehicle in the asset section, and you might have the money you owe for that vehicle in the liabilities section. Maybe you borrowed money from your uncle. That would be a notes payable, and that's in the liabilities section. At the bottom of the balance sheet, we have equity. Equity is what's left over. So you take assets minus liabilities, what's ever left over is equity, or so-called book value. So it's everything you got minus everything you owe, whatever's left over is called equity. And by the way, this is extra credit. Assets minus liabilities always equal equity. That's why they call it a balance sheet. If assets minus liabilities equal equity, it's in balance. And that's how, somebody came up with the word balance sheet. You think they could come up with something more clever. A few other things under the equity section. Generally, a balance sheet will show you year-to-date income. This is all the income you've made so far this year, if any. It'll also show something called retained earnings. That's all the income that you've made since you started your company. One more thing on the balance sheet might be dividends. You pay yourself a salary if you're a corporation, and then you could pay yourself a dividend. As a stockholder of your corporation, you can pay yourself a dividend. And dividends would show up on the balance sheet as well. So assets minus liabilities equal equity, and that's a balance sheet. Thank you.